Today we're going to talk about the Atlanta real estate market, what happened in the third quarter of 2019, and how it compares to a year ago to give us a better idea of maybe where the market's going in the future. Hello again, I'm Pete English with Keller Williams Realty in the Atlanta Perimeter office, and I'm glad to be with you to see if we have any insight that may help you in your real estate decisions. So let's go to the computer, take a look at several of the charts that we have, and hopefully it'll give you an idea. When we first start, we'll talk about pretty much a summary of the market and then get deeper into it. So if all you're looking for is a summary, then the first part of this video will tell you what you need to know. If you'd like to know a little bit deeper, or if you'd like to get deeper into your specific part of Atlanta or even your subdivision, then simply let me know and I'm glad to help you out. Alrighty, let's go to the computer. All right, we're going to start with the third quarter of 2019 and the market report. Let me start by saying that we at Keller Williams contract with a research company to pull all of this information for us, certainly on a quarterly basis, and actually we get it on a monthly basis, but it's only summarized quarterly. However, if you'd like it on a monthly basis, simply let me know, and I'm glad to help you out with that. Alrighty? Let's go to the summary. As you can see from the chart here, year-to-date, September 2009, sales are down slightly from 2018. Not a lot, but it is trending downward. Median sales prices were up by 6%. Now, don't we all wish that our house prices would go up 6% compounded quarterly? I don't know that that's going to happen, but it was strong for the third quarter of 2019 compared to the same quarter in 2018. The percent of the sales price over the original listing price, what that simply means is, what did the house actually sell for relative to what the ask price was? And as you can see, it was right at 97.2%, which is a little bit lower compared to 2018. Days on the market were up a little bit. Now, we can prove anything we want to with statistics. So when we say that days on the market is up by 12%, you know, the reality is that's just a couple of days. However, it is up, and remember that this is the entirety of Atlanta. So it's not just one location, one subdivision, or one area where you may live, right? Price reductions are higher at 41.9%, which is almost 6% higher than in the third quarter of 2008. Now, what that simply means is that price reductions, if you listed your house for $100 and couldn't get anybody to buy, then you would start lowering your price. A couple of things happen. Sometimes you price the house too high. Sometimes the agent prices the house too high. Sometimes the marketing is not everything it needs to be. And so ultimately the market is going to tell us what the price needs to be. So let's go back to the chart and keep looking at what we've got. Failed listings is 31% of the listings. Now, again, remember, this is all of Atlanta. So your subdivision or your sector of Atlanta could certainly be different than these numbers right here, okay? Overpriced listings, 60% of the listings were overpriced. Now, what does overpriced mean? Overpriced could certainly mean that maybe we're a little too high on our expectations, but overpriced could also mean that, in the nature of doing deals, if you ask for $100 and somebody comes in at $90 and you sell at $95, well, you did do a price reduction, but that's part of doing the deal, all right? Supply. Now, this part is kind of interesting. It says that it was nearly flat at 2.9 months of supply. That's actually a big deal because what we call a normal market is 6 months of supply. So here we are right here at less than 3 months of supply for all of Atlanta. That means we're still in a seller's market for Atlanta as a whole. But as you'll see in a chart later on, your part of Atlanta or your price range for home may be different than what these numbers would indicate right here. So even though we're still in a seller's market as a whole, your subsection may be different. All righty? Let's go to the next page. All right, this one is a little bit jumbled, if you will. However, you can always hit the pause key on this video to take a look at this chart for as long as you like. Notice let me just use my mouse here, in column 2 where it says third quarter of 18 and third quarter of 19, the median days on the market in 18 was 25 and the median in 19 is 28. And that goes back to the 12% that I talked about just a second ago. So the median days on the market is a little longer than it was this time last year. All righty? And then price reductions, as you can see, 6%, 36% of the houses sold in the third quarter of 18 versus 42% in the third quarter of 19. So we are seeing more price reductions in the housing market. The sales price over the original list price, in 18 we've got 97.6% of what we were asking for. In the third quarter of 19 we get 97.2%. So although it does say worse, it's only by a fraction of a percent. Number of failed listings. All right, now a listing can fail for a whole bunch of different reasons, not the least of which is the listing expired or the owner of the home withdrew the house from the market. So technically the listing failed. So a listing can fail for a number of reasons, but that's one of the things that we track. All right, we get back to the supply. Remember we talked about the 3-month supply, 2.8% versus 2.9%. We're saying it's not significant other than we're still in a seller's market. So if you're a seller, then it could be a positive thing for you depending on where you are in Atlanta. The number of active listings, if you notice in the third quarter of 18 we had 13,000 active listings. In the third quarter of 19 we have 14,000 active listings. So therefore, if you're selling your house, you have more competition to sell your house. Pending listings. All right, so a pending listing is simply a listing that is pending contract. The very likelihood that it's going to close, they don't all close, but what we're showing is we have fewer houses listing or pending listing this time this year than we did last year. And the number of sold listings is, like less than 20. So that's not significant. So it's about the same number of homes that sold in 18 versus 19. And 1.1% of distressed sales simply means that there's not a lot of distressed sales. This isn't 2008 or 2009. And this idea of anybody being able to buy a house and flip it, it sounds good on television and certainly on HGTV, but the reality is there's just not that many houses out there that are distressed, number one, or that are priced so far under market that's an easy flip. So, whereas that was pretty active in the years past, it's not such a big deal today. Alrighty, let's go to the next slide. Alrighty, what we're looking at here is the percentage of the original list price received by sellers, and it's broken down by the price of the house. So we have ranges here, and this again is for all of Atlanta, so remember that your subsection of Atlanta may differ. Let's go backwards. All right, let's just take, for example, right here in the middle, if your house is between $500,000 and $750,000, then this time what we're looking at is last year is in the gray, this year is in the red. So this time last year, you got 96.2% of your ask price. This time this year, you get 96.2% of your ask price. So if your house anywhere in Atlanta is, or in Atlanta as a whole, is in the $500 to $750 price range, you're pretty much getting exactly the same thing this year as you got last year. So if we notice anything that's significant, notice if it's less than $100,000, then there's a handful of percentage points difference. But look at the $1 to $1.5 million. Okay, so whereas last year you only got 91% of your ask, this year you're getting almost 93%. So that's 2%, which, if you think about it, 2% on $1 million or $1.5 million is real money, all right? So things are changing in the upper end market. Let's go to the next slide. Median days on the market, again, this is divided by price of the house. If we go back to your house is between $500 and $750, then whereas last year it took you 50 days to sell your house, this year it takes 48 days. So that's not significantly different, but when we get in the higher range, notice $750 to $1 million doesn't take as long. $1 million to $1.5 million doesn't take, that's a 30% jump right there, to going from almost, it's more than 30%. And then if we go over $1.5 million, then last year, this time, it took 162 days, almost a half a year to sell your house. This year, it takes 83 days, so that's significant, all right? Let's go to the next one. Oops, wrong button. Price reduction and the effect on the days of market. Now, what this necessarily means is, if you price your house right, it sells quickly. If you don't price it right, then it takes a while to sell. So what we're looking at this chart right here is in the third quarter, right here, if you price your house right and you don't have a price reduction, then on median, it takes 10 days to get your house under contract. Whereas if you do have a price reduction, it's going to take approximately 77 days to get your house on the market, to get your house under contract. And what we're looking at this chart right here is what was the numbers in the first quarter, what were the numbers in the second quarter, what were the numbers in the third quarter, and where are we year to date. Now, as we'll see in a chart in just a minute, the time that we're selling a house during the year, say from January to December, changes significantly. The most active market generally is in the springtime, right before the early summer, and then it slacks off from summertime until the winter, until the dead of winter, until January of next year, and we'll see that in a chart in just a second. Let's go to the next chart. All right, what we have here is Atlanta is divided into a whole bunch of sections. This is what we do as real estate people. As you can see on the chart, there are different areas of Atlanta, and this is what we track on a micro level. So for instance, if you lived, say, in East Cobb, you would be either in, oops, let me go backwards, you would be either in 81, 82, or 83, most likely. Dunwoody, Sandy Springs is over here, 131, 121. And this is how we track the data in the real estate market. So if you're looking for a house in a specific part of town, then what we do on the back end when we go into the computer system is we look at specific areas. So the data that we're looking at today is data compiled by area. So we'll get a little deeper into that. All right? This is simply a historical chart showing all the way back to 2009 the supply of houses for sale, how many are active, how many sold, and what is the supply. As you can see way back here in 2009, the red line is active houses for sale. So 30,000 houses, that's a lot of houses, okay? This is how many down here, this blue line, this is how many sold, okay? And then the black line is the months of supply. This green line that goes straight across here is what we call a balanced market, and that's approximately 6 months of inventory. So back in 2009, there were a lot of houses for sale. There was a lot of supply available. There weren't a whole lot selling. But over time, as we see back in about 2012, the market changed substantially, and what we have is there weren't any, basically the supply of houses was diminishing down, and we were getting closer to stabilization from the 2008 period. So if we go back and look at this chart, what this shows us is the supply of housing has been way below 6 months since 2012. So that's about 7 years that we've been in a seller's market. Now remember that this is all of Atlanta. This is not, this is not just East Cobb or just Dunwoody or just Alpharetta. This is all of Atlanta as a whole. So it's not really telling the whole story, because what you're most interested in is where you live, right? So let's go back and look at, let me go backwards. How has the seller's market affected us, all right? The number of active listings, remember that chart just a second ago, if I go back here, it says 31,000 versus 14,000 today. Let me go backwards. See, we had 31,000 houses for sale back then. Right now, we have a little less than 15,000, okay? That's what this is talking about right here. The supply in months. Back then we had 16 months of supply. Today we have almost 3 months of supply. We had a lot of distressed sales then. We have no distressed sales now. The number of houses sold was less than 2,000. Now we've got 4,000, so that's a 100% difference. The average sales price, $143. Today's $290. Now again, remember, $290 is for all of Atlanta. Your neighborhood may differ. Median days on the market to sell any house in Atlanta in 2009 was 145 days. Today, it's approximately 33 days, okay? And the median sales price versus ask price was 80%. So if you ask $100, you only got $80. Today, if you ask $100, you get $96.8, right? Percentage of price reductions back then was 75% of all homes sold back then, the price was reduced. 75% of all homes. Now today, it's at, call it 45%, all righty? And the number of failed listings back then was 74% versus 35% today. Simply meaning that even though the house went for sale, 75% of the time it never closed, okay? Whereas today it's 35% of the time. Let's go to the next chart. All right, this one may be a little hard to see, but what we're showing here is when you go to sell a house, having it, most of the sales are going to be in the first few weeks. And this line right here is time. So the preponderance of homes that are sold during the first few weeks that they're on the market. The longer they're on the market, the fewer that sell. That's what this chart's showing us right here, okay? What it really means is, if you see right this bullet point, missed buyers that would otherwise see your listing. Now, why is that a big deal? That's a big deal because if you don't price your house right, let's say that you think your house is worth $150, but the market says your house is only worth, say, $100 or $125, then there's a certain group of people that at that moment, when you put your house for sale, people are not looking in your range this way over here, okay? So you'll never see those buyers because it wasn't priced where the market says it ought to be priced. And that's what this chart is showing us right here, is it's showing us that the preponderance of houses are sold in the first few weeks. Now notice this chart over here, what this chart over here is showing us is that the percent of the original list price received by the seller over time, okay? So the longer that the house is on the market, the less that the seller is going to get for their house. And these are numbers, these are not numbers that we make up, these are real numbers. Remember we talked about just a second ago there were 15,000 houses that sold last quarter. That's where these numbers are coming from, this is when they went on the market, for what price they went on the market, and what they ultimately sell for, and that's where these charts are coming from, okay? Let's go to the next chart. Chances of going under contract. Now this, again, if you need to, pause the video so that you can look at this chart. But let's go back to our imaginary $500,000 house, or the house between $500 and $750. Notice that there were, and this is in the last quarter, there were 3,700 houses for sale, of which 959 are pending, were pending, okay? Pending or closed, which means that of the 3,700 houses for sale, 26% of them actually sold. So the odds of selling your house in that price range was 1 in 4, okay? Does that make sense? So just because a house goes for sale does not mean it's going to close. And in that price range of 500 to 750, you had a 1 in 4 chance of actually closing during that price, in that price range. Hopefully that makes sense. If we go back over to the chart, let's look at some of the other price ranges, okay? Notice if you had a house that was but almost $200,000, you had a 1 in 2 chance. You had a 52% probability that your house was going to close if it was priced in that price range, okay? Now, if we go up here to the $1.5 million and over price range, what you'll see in that chart is you have a 1 in 8.5, call it 9, a 1 in 9%, 1 in 9 chance of selling your house if the house was for sale for more than $1.5 million, okay? So, you know, the higher you get, the lesser the likelihood that you were actually going to close on that house, okay? So, let's go to the next chart. Price reductions and, you know, during the period of time. I mentioned just a second ago, is depending on the time of year depends on how active the market is. So, you know, the market in the springtime, there are more houses sold during the springtime, and it's active because, you know, people are getting out of school or they're moving to other towns and they want to get moved and settled before the next school year starts. So if we go back to the chart here, in the first quarter, and we're looking again at the last 3 years. So this gray chart is 2017, 2018, and 2019. So during the first quarter of 17, 41% of all houses had price reductions. In 2018, 39% had price reductions, and in the first quarter of 2019, 39% had price reductions, okay? The second quarter, which again is the springtime, is when you see the fewest price reductions because the market is the hottest during that period of time. Third quarter, it starts ramping back up again, and then the fourth quarter is generally, on an annual basis, is the highest percent of time that you're going to see a price reduction because houses are just not moving as fast, and people that want to sell or need to sell are more willing to reduce the price during the last quarter of the year, okay? So what we're seeing here is the third quarter of this year, we're seeing more price reductions than we did this time last year or this time in 2017. So the market is shifting a little bit, and we're keeping a close eye on that, because just because a house in your neighborhood sold for $100 12 months ago doesn't necessarily mean that the market is still, we'll still sell your house for $100. So we track that to be more granular so that when we go to price the house, we've got a pretty darn good idea of what the market is going to dictate and how do we get your house sold for as much as we can, as quickly as we can, irrespective of what the market was 12 months ago or even 18 months ago. So let's go back to the next chart, see what we got. The incidence of price reduction over the price of the house. So remember, we talked about our fictional house at $500,000 or between $500,000 and $750,000. Now, this is where we're getting more granular. Again, remember, this is all houses in Atlanta, irrespective of what it costs. So a $100,000 house to a $5 million house. This is all combined, but what this chart shows us is by pricing category, okay? So let's go back and look at our $500,000 house. The incident of price reductions in the third quarter of 18 versus 19. So last year, there was a 49.2% probability of price reduction, not probability, this actually happened, all right? So 50% of all houses in the third quarter of 18 had price reductions, and 50% of all houses in 2019 in the third quarter had price reductions if your house was priced between $500,000 and $750,000. So notice that they're all kind of close. I mean, it's a little, the outliers are less than $100,000, but notice that between $1 million and $1.5 million, we're seeing that that market is starting to actually tighten up a little bit, which simply means that the builders aren't building those big houses, and the inventory of those big houses is coming down, so we're not seeing as aggressive price reductions as we have in the past. Okay, so let's go, well, let me look at one more thing. See this total over here on the far right? In the third quarter of 18, 36% of all houses had price reductions. This time this year, 42%. So at the market as a whole, we are seeing more price reductions, but depending on where your house sits on the scale depends on what your market for your house is selling for today. Alrighty, so if we look back, let me go backwards again, and we track these things by area of Atlanta, then housing within your specific area could be totally different than housing somewhere else in Atlanta. So what we're looking at today is all of Atlanta, not a specific subsection of Atlanta. So if you're interested in your particular area, simply let me know, and I'll show you exactly what your area of Atlanta is doing. It gives you a whole better perspective of real estate in your market, not just Atlanta as a whole. Okay, so let's go over here and look at the reduction percent taken by price range. Now, we talked about just a minute ago that there were reductions, right? We go back to our $500,000 house, and we showed that there were reductions, but we didn't show how much. So the reduction is approximately 5%. So again, 5% on $500,000 or 5% on $750,000. If your house is in that range, that's the approximate, or it's the median. Now, median simply means that of all of the reductions taken, 50% were less than 5% and 50% were more than 5%. So that's what median means. It's not average, okay? That's a difference. All right, so when we look right here at the over $1.5 million, the price reduction was 10%. Okay, so you can look at it, you can get an idea of where your house sits in this range right here, and it gives you a pretty good idea of if you were to put your house on the market to sell it today, or if you were buying a house today. It gives you an idea of where the bargaining range is. All right, it gives you an idea of what the market is dictating, and this is the kind of data that we use whether we're trying to price your house or whether we're trying to help you buy a house. This is good information. Alrighty, let's go back over to the next chart and let's look at the price reduction effect. And what this is showing us is the percentage that the house, the percentage the house sold for over, or not over, but versus the original list price. So OLP means original listing price. Back to our $500,000 house, all right, if there was a price reduction, if you decided to sell your house and we had to do a price reduction, then you would have gotten approximately 93% of your ask price. If you priced it dead on what the market says, then you would have gotten right at 99% of your ask price. Now, that can be a big deal. So if we look at our fictional $500,000 house, we're looking at a difference of 7%. So 7% of $500,000 is about $35,000. That's pretty serious money. That's at a $500,000 price point. If your house is more than that, then obviously that number gets bigger. So pricing it correctly can have tremendous financial effect. Alrighty, let's go back to the next one and say the price reduction, the effect on the days on the market. Now this simply means that if the house is priced what the market says it should be priced at, then well, let's go back to the chart and look at it. Back to our $500,000 house, right? If it's priced with no price reduction, then the houses that sold in the third quarter sold in 12 days. If there was a price reduction, then the houses that sold took 98 days. Now remember, this is the median. This is not the average. So 12 days versus 98 days is a significant amount of time depending on where you are in your move, whether it's your move in or your move out for that matter. But if you wanted to sell your house and you priced it right, it took less than 2 weeks to go under contract. But if you had to have some price reductions, then it was going to take you about 100 days to sell your house. So, if you need to get up and go, then that's not a good thing to do. So pricing it right is important. Let's go to the next chart. All right, now this one, it takes some curl up time to understand what's going on right here. So what we're saying is in the third quarter, there were 14,950 closings. Let's call it 15,000 closings for easy math, all right? So 100% of all the houses is 15,000 houses. So for the vast majority of the houses, they sold at 97.2%. The sales price was 97.2% of the original listing price, and the house was on the market for 28 days. Now this is taking all of the houses that sold with no price reductions and all of the houses that sold with price reductions, and you bring it all the way up to the top. So again, we can prove anything we want to prove with statistics. So let's come down here and look that if there was no price reduction, then there were 8,689 houses, or exactly 58.1% of all the houses that sold in the third quarter throughout metropolitan Atlanta sold with no price reduction, and they sold 99.9%. So let's call it 100% of the ask price and 10 days on the market. That's pretty good, all right? So if the house was not previously listed, then there were 8,200 closings. They sold for 100% of the ask price for 9 days on the market. Now this totals upwards, all right? So we also talk at, well, if the house was previously listed, what does that mean? That means that the house was listed either by the same agent twice, or agent number one lost the listing, agent number two came in and sold the listing. The price was the same. They just marketed it differently, all right? So that's what this chart is showing us down here, is we still sold it, for all intents and purposes, at 100% of the ask price, but it took us 98 days to sell it. So over here, we priced it, we had the right price and the right agent. To come over here, we had the right price, but the wrong agent. So again, the house sold for the same amount. It just took much longer to sell, and maybe some things changed. Maybe the marketing changed, or the new agent that came in did something different that caused the house to go ahead and sell at the same price, but it just took longer and probably with a different agent. And that's why it says down here, right price, wrong agent. Now let's go to the other side of the ledger. Not previously listed, there were 4,100 closings, or 27% of all 15,000 houses were not previously listed. However, there was a price reduction. And in that scenario, the seller got 94% of the original list price, and it took 54 days on the market to sell it. All right, in that scenario, we have the right agent, but the wrong price. That makes sense? And then lastly, we come over here and we say the house was previously listed and there was a price reduction, and in this case, the seller got 90% of the original list price, but it took 173 days on the market. Now, in this scenario, we have the wrong price and the wrong agent. So, as you can see on this chart, 60% of the houses that sold in the third quarter were priced correctly. 40% had to have price adjustments to meet the market. And that's what gave us the 15,000 houses that sold in the third quarter, and what percentage were priced correctly and what had to have price adjustments to get them sold. All right, let's go to the next one. Again, these numbers, if we go backwards, all of these numbers right here are different depending on what part of town you're in. So depending on if you're in, I don't know, Cumming or Peachtree City or Douglasville, the days on the market and that sort of thing could be totally different. So if you want to know more specifically about your area, let me know, and I'll do another, I can dive down deeper into the numbers specifically for your area. All righty, where does that put us? All right, oh, so here's what I did. I said, let's grab an area. So I grabbed area number 82. So if we go backwards, area number 82 is right over here in East Cobb, all righty? So if we go to in East Cobb, we had 41 closings last quarter in that specific area. Now remember, in that little chart that I showed you, there are three sections of East Cobb, and I just picked one of those sections. And in that particular section, there were 41 closings. They closed for 96% of ask price, and they were on market for 40 days. With no price reduction, there were 21 closings, or 51% of all the closings had no price reductions. We got 98.2% of the original ask price, and the house was on the market for 10 days. Not previously listed, there were 21 closings. All right, so all of the closings in the third quarter that were no price reductions had not been previously listed. So what that means is the real estate agents got it pretty right in those, for the ones that were priced correctly. And what we saw over there, let's go back to the chart and see that about 50%, so we had 41 closings, 50% of those closings were priced correctly, and the other 50% had price reductions. So let's look at that chart and see what it looks like. Of the 50% that had to be adjusted, the list price had to be adjusted, 30% or 12 of those closings were on the market for, let's call it 80 days, and we got 94% of the original ask price. And remember, we've got the right price, the right agent, the right price, the wrong agent, and then we had the wrong price, right agent, and then the wrong price, wrong agent, okay? So over here where we had the right agent, but we had the wrong price, we got 94% of the original list price. So again, that's 6% off of what the market says. So again, if your house was $500,000, 6% of $500,000 is a pretty significant amount of money. So pricing it right, again, is kind of the theme of this, is very important. And then lastly, we look at the wrong price and the wrong agent. In that case, when the house finally sold, it sold for 93% of the original ask price and was on the market for 147 days. So that gives you an idea of a specific subsection of Atlanta, and every one of these subsections has market data that looks just like this. Let's go to the next one. All right, notice that this is over time. So this is 2017, 18, and 19. And what that simply tells us is failed listings. So a failed listing, again, the house did not sell. Either nobody wanted to buy it for that price, or the house was taken off the market. But as you can see, in January of each year, almost, in every single year, you have a very high probability of failed listings. But as springtime comes along, the houses are selling, and then as spring turns into summer and fall and winter, then again the trend line goes up for failed listings, and that happens in every single year. And what you would see is, if I took this chart out for 10 or 15 years, that trend line does exactly the same thing every single year. Sometimes what happens is houses sell quickly in the springtime, and people that are selling their house later in the year, again, presume that if a house sold in March or April for $100, then in September it should sell for $100. And the fact of the matter is a lot of times it doesn't, and so therefore either a price reduction has to happen, or the owner says, well, I'm going to sit on my house until next spring. So it's your prerogative as a seller to do what you want. But here are the numbers, and the numbers are telling us the story and should help us with our strategy. Okay, let's go to the next chart. This is the third quarter of 18 versus 19, and this is showing us what our total failed listing percentage is by price range. Again, we go back to our $500,000 house. In 2018, in the third quarter, 44.6% of houses failed. In the third quarter of 19, 43.6%. So it's a drop. Okay, it's a drop in the $500,000 range. It's a drop in the $750,000 range. It's a drop in the $1 million range, and it's slightly up over $1 million. So that gives you an idea of what happens in the third quarter. So if we put it all together, this is that same chart that we looked at earlier, but this again is for all of Atlanta. And what it's telling us is 69% of all the houses that sold, of the 69 that actually sold, 40% had no price reduction. Okay, they were priced correctly. 42% of those that did sell, which was 29%, sold but with a price reduction. And then further over here, we had 31 that failed and never even sold, probably because of price reductions. And then down here, we did have a price reduction, so we add that price reduction with these that never even sold, and it shows us that 31% plus 29% is 60 of every 100 listings were overpriced. So again, it becomes pertinent to understand how pricing works. And I will say this, that a lot of people say, well, real estate agents would just want to lowball the house to get it to sell, and that is absolutely not what's going on. A real estate agent wants to sell the house for as much as we can get, number one, and as quickly as we can get, number two. So these are the numbers that show you, again, in the third quarter of 2019, there were 15,000 houses that sold, and these are the numbers that support why we come up with the pricing that we come up with. Okay? Let's go to the next chart. days on the market for sales that had 100% sales price over the original listing price. Now what this simply means is these were the houses that were priced right, that sold for 100%, and which one of those, or what was the days on the market for those. We go back over to our $500,000 house that sold for 100% of the list price, were on market for 5 days versus the entire market in that price range, which was on the market for 48 days. Okay? You can always hit pause on this video by simply hitting the K key. All right, that'll pause your video. Hit K to stop it and K to start it again. And you can look at any of these charts for as long as you want to look at. Okay? Let's go to the next one. All right, this is supplemental. Let me go back. This is supplemental information that it doesn't fit. I couldn't cubbyhole it in exactly a chart, so I just kind of put it as supplemental. So what we're saying is in seller paid closing costs. So it's not uncommon that as a seller, when you go to sell your house, the buyer is going to ask you to contribute towards the selling cost or the closing cost. And so one of the things that we want to know is, well, if the buyer is going to contribute, give me an idea of how much money we're talking about. And that's what this graph is talking about right here. So what we're saying is in the third quarter of 2019, call it 67% of the time, the buyer is asking the seller to pay some closing cost. Okay? Now the next question is, well, fine, how much are we talking about? So when we come over here, let me go back to this. Let me go to this chart first. All right. If your house again was in the $500,000 range, then 62% of the time the buyer is asking for closing cost. And this shows you right here that that is diminishing the higher the price is, okay? And it's mapped against the gray area is 2018, the red is 2019, but it's showing you what percentage of the time the buyer is asking for the seller to contribute to closing costs. The next slide, I believe, is telling us how much. Yeah, okay. Seller paid closing cost, dollar amount paid. So if you look at it from about $200,000 to almost $1 million, it's pretty much the same across the board. Is the sellers are being asked to contribute between $5,000 and $6,000 in closing costs. So it gives you a good idea to understand that when you go to sell the house, what is the buyer going to be asking you to contribute towards closing cost, okay? All right, and then this is the supply. This is compared to last year. Remember, we talked about what is a balanced market. Notice this vertical line right here. It says a balanced market is between 6 and 7 months worth of supply. So if we come over here and track where your house is, if your house is a 500 to 750, then we're still in a seller's market, okay, because we don't have a balanced supply. And so if you want to say who wins and who loses, then more often than not, if you're in the seller's side and you're selling your house, then you have more leverage than the buyer. Now what happens in today's market, and I'm sure you've all seen it or heard it, is a house goes on sale down the block and there are multiple offers on the house. So they want to sell the house for $100 and 3 offers come in, and one person offers $100 and the other person offers $101 and the other person offers $102. That's exactly where you want to be as the seller, and so that's what happens when we have a short supply of houses. And if we go back to this chart, obviously 100 to 200 all the way up to $750,000, we have a seller's market. Now, when you get over $1.5 million, it gets pretty strong. We've got 15 months worth of supply in the over $1.5 million market. So it's still a buyer's market on the upper end. However, it's very much a seller's market on the lower end. Alrighty, I think we kind of talked about this chart earlier in the conversation. Most houses sell in the first few weeks that they're on the market, and then the price of the house diminishes over time in order to get it sold. The supply of listings, well, this goes back to 2011, where we talked about the supply of this is the balanced market, this 6-month supply right here, the green line, and for the market as a whole has been a seller's market for quite some time. But notice that this trailing average line right here is beginning to turn, which means the market is changing a little bit, and we'll see a more balanced market in the coming years. Okay, that's all I've got for right now. This is Atlanta as a whole. This is my information. If you want to send me an email, you can certainly send me an email, call me on the telephone, and I'd be happy to help you out and talk about your specific market area and go as granular as you want. So I certainly appreciate you taking the time to visit with me. My name is Pete English. If you know someone who's either looking to sell a house, would like to buy a house, or you've got a relative that wants to talk about trust and how to set up their real estate holdings for their estate, then I'm happy to talk with them. And until next time, have a good one, and let's see what we can bring together next quarter and see how the market changes then. All righty? Thanks.